How to pick a stock: best practices for new investors. Welcome to Affluence Online, the place to learn about investing and managing your finances. Stock picking is a very complicated process, and investors have many different approaches. However, it is wise to follow general steps to minimize the risk of the investments. This video will outline the basic steps for picking high-performing stocks. Before we jump into the video, hit the subscribe button and the notification bell so you don't miss our upcoming videos. Now let's get started. Step 1. Decide on the time frame and the general strategy of the investment. This step is very important because it will dictate the type of stocks you buy. Suppose you decide to be a long-term investor. You want to find stocks that have sustainable competitive advantages along with stable growth. The key to finding these stocks is by looking at the historical performance of each stock over the past decades and to do a simple business SWOT analysis on the company. If you decide to be a short-term investor, you should adhere to one of the following strategies. A. Momentum trading. This strategy is to look for stocks that increase in both price and volume recently. Most technical analyses support this trading strategy. Look for stocks that have demonstrated stable and smooth rises in their prices. The idea is that when the stocks are not volatile, you can simply ride the uptrend until the trend breaks. Contrarian strategy. This strategy is to look for overreactions in the stock market. Research shows that the stock market is not always efficient, which means prices do not always accurately represent the values of the stocks. When a company announces bad news, people panic and the price often drops below the stock's fair value. Decide whether a stock overreacted to the news. You should look at the possibility of recovery from the impact of the bad news. For example, if the stock drops 20% after the company loses a legal case that has no permanent damage to the business's brand and product, you can be confident that the market overreacted. Find a list of stocks that have had recent drops in prices. Analyze the potential for a reversal through candlestick analysis. If the stocks demonstrate candlestick reversal patterns, go through the recent news to analyze the causes of the recent price drops to determine the existence of reversal opportunities. Step 2. Conduct research that gives you a selection of stocks that is consistent with your investment timeframe and strategy. There are numerous stock screeners that can help you find stocks according to your needs. Step 3. Once you have a list of stocks to buy, you would need to diversify them in a way that gives you the greatest reward to risk ratio. One way to do this is to conduct a Markowitz analysis for your portfolio. This analysis will give you the proportion of money you should allocate to each stock. This step is crucial because diversification is one of the free lunches in the investment world. These 3 steps should get you started in your quest to consistently make money in the stock market. They will deepen your knowledge about the financial markets and provide a sense of confidence that will help you make better trading decisions. Thank you for spending some time with Affluence Online. Make sure to like and subscribe to our channel so you never miss another video. We also handpick these videos that we recommend you watch next. Thanks for watching, and we'll see you back again soon.